Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. I'm recording this on March 17th. Happy St. Patrick's Day. I'm recording right around the market open thereabouts. So from a top-down perspective, when you're looking at the primary evidence, obviously the market, the vast majority of major indexes, the vast majority of stocks, cracked any sort of intermediate term uptrend they might have had during this sort of big panic during the past week. I think coming into today, we have less than 1/4 of NYSE and Nasdaq stocks above their 50-day lines, that sort of thing. And again, most indexes below as well. I have a few thoughts. First, I just want to say, actions speak louder than words. So in Cabot Growth Investors model portfolio, we never floored the accelerator. We had high 30% cash sort of range. And now we're in sort of the mid 60% range as we've pared back on a couple things and sold a couple names that just kind of broke outright. So that's sort of the headline. I do have a few thoughts though, okay? Number one is that these sort of bank financial panic things, they tend to have reverberations, okay? Now, I would say if there's not a reverberation, easy for me to say, and the market just kind of kites higher 9 days in a row from here, obviously that would raise the prospects of a shakeout, but I'm not going there at this point. It just looks like there's going to be more news, rumors, reports, other banks, economic damage. The Fed is next week. They can always slip on a banana peel. So that sort of thing. Just historically speaking, that is usually what happens. With that said, okay, I would say this sort of news tends to come out near a market low. When I say near, I don't mean within days. It could be a couple months, but it sort of shifts the market's perception from, hey, is the Fed going to break something here, to, okay, something's broken. Is it contained? And what is the Fed and maybe Uncle Sam doing to fix it? And in kind of a weird way, it kind of helps the market look over the horizon. I'm not trying to make it sound like this is a good thing. It's not. The market's very weak here, and we've been raising cash. But just something to keep in mind. More important, I'll show you this in the charts, is, for me anyway, for the first time in really a year, maybe more, the Nasdaq is kind of the strongest major index, or not strongest, but most resilient. And there's a lot of growth stocks holding up, and a lot of stocks that have taken hits, but not, sharp, but not unreasonable, not abnormal at this point. So we'll see how it goes. I mean, interest rates may have had their high for the cycle, which tends to help growth stocks, and economically sensitive stuff is weak. So it could be something that, plays into the growth side of the arena. But at this point, like I said, actions speak louder than words. We have been raising cash. I'm not super anxious to go and put a bunch of it back to work. We'd have to see a few really good days at least for that to happen. So at this point, it's staying safe, but keep your eyes open, okay? Again, we're like 18 months now, or 17 months, I guess, from the Nasdaq top. This is not the first inning of this decline. And again, this news tends to happen later in the cycle. So let's see how it plays out. Okay, right now, definitely cautious and a lot of cash, but keep your eyes open because there are a lot of stocks that I'll show you that are holding up pretty well, okay? Let's hop into the charts. As usual, I'm using MarketSmith. It's a program of Investors Business Daily. You can learn more at marketsmith.com. Great product. Costs a little bit of money, but we use it all day long for our screening and stuff like that, okay? So we're going to start here with the NASDAQ. And now back here, I will say, back in this time frame, the Facebooks and Apples and, Googles and all that of the world, Amazon, were weighing the NASDAQ down, so it was kind of weaker. Now they're kind of more resilient. People are, I don't want to say hiding there, but so that's helping the cause. But be that as it may, the NASDAQ is definitely the strongest or the most resilient major index, actually above all its moving averages coming into today. And you can see down here relative to this is relative to the S&P 500, it's hitting a new, I don't know, what's this, highest level since early October. So that's a few months. It's pretty good. So that looks okay. But when you start digging into more of the broad market, when you start kind of working down the chain. So this is the S&P 500. It did crack the 50-day decisively during this, panic or whatever. It bounced yesterday. It looks like it's going to open lower today, somewhere down here or something. But, it's still in an intermediate term downtrend or sideways trend, however you want to say it. But the uptrend is not, obviously cracked. And then when you keep digging down, so here's small caps. This is this is a very steep decline. I don't know percentage-wise, but 192 to 170. That's pretty sharp in just a few days. So, hopefully you find some support in here. That's kind of the thought, and I'll talk about that in a second. But MDY, which is the mid caps, again very steep, better than the small caps in terms of the overall positioning, but still clearly below intermediate and even the 200-day line in terms of moving averages. And the New York Composite, which interestingly was the laggard index during the January rally. And of course, that's full of oil stocks, not full of, but it has more oil stocks, financials, that sort of thing than other indexes. And of course, this one, has been hit pretty hard too, clearly well below the 50-day line. So there's no question the intermediate term trend is down, or at best, if you want to say some things are sideways. So that's why we've been raising cash and going from there, okay? In terms of the weakness, I mean, I'm not trying to scare you, but here's, XLF, which is kind of your big dog financial ETF. I mean, again, it's kind of a mini, I don't want to say mini crash, but, it's just a meltdown here. We'll see how it goes, but, one day or 2 days doesn't do anything for me. We're going to have to see many, many days in here. And like I said, there's probably going to be just, rumors and over the weekend, overnight, Credit Suisse was this week, next week it's something else. Somebody bailed out. Oh, no, this part of the economy is getting killed because there's not as much lending. So you're going to likely see some sort of thing, even if we can sort of bottom out here. Okay, that's just what the odds favor. But you just flip through stuff. Yes, financials look weak. This is the KRE, the regional bank. This has been the sector on the margin, of course. It's just imploded. But even looking at, this is the Dow transports. It's not terrible, but clearly a crack. Biotechs, which, I had pretty high hopes that these things could finally get out of their own way, but they can't. You can see a decisive break, really broke below the 50-day line weeks ago, but a decisive break of late. And then you just look at some of these names that looked really good. So this is Steel Dynamics. This was a great looking steel stock. Other names look pretty good. I'm not saying it's coming down here on the weekly chart, but clearly it's unraveled here on huge volume. You can see this big day a couple of days ago to crack the intermediate term uptrend. We'll see. Again, you start getting these, I'm all for it. All of a sudden I'm doing the video next week and Steel Dynamics is back up here. I'd say, wow, that's certainly meaningful. Doesn't mean it's going to go straight up, but you want to be open to it, but there's a long way between here and there, okay? And then stuff like United Airlines. Now they did report. They said, hey, first quarter isn't going to be as good as we thought. But again, you're just talking, 55 down to 42 in basically the blink of an eye. So you're just seeing a lot of these economically sensitive stuff get hit. On the flip side, though, even if you look at, so this is the QQQE, if it wants to let me look at it, see if market's missing a good mood here. But even if you look at a broader range of growth stuff, it is holding up much better than the major indexes, okay? We'll go on to, here's the spiders, okay? Just take my word for it. Even the unweighted Nasdaq 100, not as strong as the Nasdaq, but relatively stronger than certainly small caps, mid caps, all that stuff we saw. It still looks okay. It's hanging in there. Yes, XLP has perked up a little bit here, so you can see the relative performance line. But compared to like the Nasdaq or the unweighted Nasdaq 100, which I was trying to show you, it's not really outperforming much. Okay, and then you look at stuff like the chip stocks I had mentioned was clearly the best looking growthy area, and it's really holding up well. And I'm going to give you 4 names, but there's 10 names that look good to this point. Of course, you could come in next week or the week after in a weak market. Maybe they rotate out of them, but to this point, they certainly have had an excuse to die or excuse to really break down. And not only they really didn't even get below where they were a couple weeks ago. This is the SMH as a whole, and then on Thursday they pop. So we'll see how it goes, but so far so good. And the last thing I just want to say is, I don't trade on this, but this is the 10-year note yield. So 40 means 4% over here. So you can see obviously it's gone from 0.5% to 4.5%, call it. But it's been, a few months here of topping, and then, obviously this is news driven and things can reverse and all that. But, you're starting to get to the point where, hey, maybe interest rates are at the high for the cycle, of course. Maybe the Fed stops or they raise one more and stop or whatever. So we'll see how it goes. But that could be a boon, not a boon, but it could be a tailwind anyway for growth stocks as opposed to the headwind that they were facing, all of last year. Okay. So that's really what we're seeing now. But overall, before I jump into stocks, because there are a lot of stocks holding up well, and I don't want to sound Pollyannish, but overall, there's probably going to be reverberations, especially when you look at the weaker of the indexes, like say the IWM. Okay. Hopefully this is just the last shakeout of the bear market, and I'm 2 months from now we're smoking $100 bills, but chances are there's going to be some, at the very least choppy trading, if not more downside ahead, okay? As for individual stocks, I mentioned chip stocks, so we'll just start there. just to show you what's going on. I mean, you see, like I said, here's mid caps. Look at that chart. Here's the New York Composite. We showed you the charts of, UAL and Steel Dynamics. And here's NVIDIA. Okay, great projected earnings growth, granted after a down year. But, clearly, under accumulation. Now, we'll see. Sometimes these things pop up in a weak market. Then they kind of just immediately turtle. So I'm not saying I go chase it here. But just, when you see that, it's like, geez, it really catches your eye. More than that is a lot of stocks are still trading kind of calmly. Like this is Global Foundries, GFS, kind of like a Taiwan semiconductor type company. Came public here, looked like it was getting going about a year ago, didn't of course, and just has been kind of up, down, but now look at this. It's actually tightening up here in the last 3 weeks. And certainly looks like it wants to break out if the market can get going. I'm not saying it will, I'm just saying it looks set up pretty well. Monolithic Power, this is MPWR, great long-term growth company. It's a $500 stock, which I know isn't everyone's favorite. But again, you kind of have, this is a weekly chart, kind of have this big, long launching pad, big shakeout late last year, okay, below these lows. And then comes back up to its old high, backs off. Again, you're kind of, I don't want to say tight, but you're very well controlled in here. You can see on the daily chart, yeah, it's gotten hit. It's been a little volatile, but geez, that looks pretty good. If you owned it, you're thinking you might have something there, okay? And then you have like Advanced Micro Devices. This isn't my favorite company, but I'm just looking at the charts. Okay, this one did go through the ringer. It's come back, and just near term, you can see it's actually staging a little, I don't want to say a breakout because it's just like a little short 4 or 5 week range, but clearly letting loose on the upside, okay? So a lot of chip stocks look pretty good, and the ones that even have rallied to new highs before this latest thing are taking the selling in stride so far. The longer they can do that, the better, okay? Building stocks, interest rates are coming down. Here's Lennar. These things aren't going to double overnight. But if you tuned in and had no idea what was going on, you'd look at this as sort of one big consolidation. And this latest thing as being this sort of 1, 2, 3, say 6 week handle to this giant base on big volume with support in here with a new RP peak. It looks pretty good, like there's a lot of things like that. This is Builder's First Source. Builder is the symbol BLDR. Again, kind of this big base. It tried to get going right here, big volume here before and after earnings. It gets yanked down by the market, but so far, holding the 50-day line. And then this one's kind of a blast from the past. This is Floor & Decor. It's not the best looking name out there, but again, it got hit in the bear, kind of built this bottoming base after the low last year. And so far, this pullback looks very normal. Don't get me wrong. If you bought it at 100 and now it's at 90, you're not feeling great. But just looking at the chart, this looks like a kind of a normal consolidation. And just, for the hell of it, there's not really much selling in here. They're kind of buying it on the dip, okay, near the 50-day line. Okay, so I'm not recommending it. I'm just saying there's a lot of strength, even in the home builders. Plus, there's like non-residential construction, stuff like that. In terms of more growth things, there's a lot of these names we've talked about. Here's AXON. I mentioned how it finally broke out. Let's look at the weekly chart. Finally broke out a couple of weeks ago on earnings. Big volume stick here. Biggest volume since June of 2020. Hey, that's pretty good. 2.5 years. And then yes, pulls back with the market, but you're not talking bank panic if you're looking at that chart so far. Okay, it is thinner and stuff. Arista Networks. This is kind of one of those like when you're looking at NVIDIA. First of all, you got the weekly chart. We've looked at this 500 times. And these latest, usually what happens is when you get this, I've mentioned this before, when you get sort of a bear market or these big declines, this decline wasn't too bad. But when it kind of does one of these things and it goes on for a year or two, not to go on a tangent, but when it kind of gets back to its high, at some point, it doesn't just pull back for a week or two. It almost forms like its own new, fresh base, like it would in a bull market, like in kind of the tail end where the weak hands are out, so that the moves are more controlled, there's support where they're supposed to be. It's not just whipping up and down. And the fact that it's doing that in the last few months when there's all sorts of news, and of course now this bank panic is pretty good. The stock's had one down week since the start of the year. And this, you can just see on the daily chart. Again, who knows? Maybe this is the top and it comes down. Sometimes you see that in weak markets. But certainly, an eye-opening sort of type of action. Palo Alto Networks, not a huge fan of the group. There's still some, a lot of the former high flyers are just dead. But Palo Alto, which I've mentioned, had this sort of beautiful comeback. Again, you kind of had this shakeout near the lows a few months ago, which is something you often see, and then just persistent advance. And then after it gaps on earnings, you're like, oh, this is going to really pull back in a bad market. No, not so far. It's held the 25-day line. Not a ton of buying or whatever, but so far, very, very good. Agilon. Now, this is kind of this is one of these, what do they call them? With the value-based healthcare, that's what I'm thinking of, is, a new way to do, especially Medicare. And I've mentioned this, had kind of this sort of triple bottom in here, took off to start the year, reacted well to earnings. But it's expensive. It doesn't make money. Again, you'd kind of expect it to get hit, and it looked like it was, but now it's come just storming right back. Okay, so we'll see how it goes. Again, I don't mean to say I'm expecting these to come back in, but sometimes these things kind of let loose on the upside in a bad market, then they sell off a few days in a row. So there's no surety. There's old overhead here, but that's kind of a newer name. Smartsheet, which, software, I find this very interesting. This is what I'd love to see from the market is, the stock, this is cloud software. So it wasn't really a leader, got killed, bottomed, came back up, wasn't setting the world on fire, but hanging in there pretty nicely. And then last week it kind of cracked on a pickup in volume, and it's like, okay, I'm taking this off my list, which I did, my watch list, broad watch list. Then it reports earnings, and boom. And I'm actually going to look this up because I'm curious. Well, I can't get it, but this is huge volume. It looks like the biggest volume in well over a year. Okay, so that's a big clue. And then actually up further yesterday on Thursday. We'll see. There's still overhead here. I'm just saying this is sort of what I call a shake and snap, sort of a shakeout, and an immediate snap back on huge volume on news. So that's kind of interesting. This is insulate. I've mentioned this before. Same sort of pattern here. You had this sort of long drawn out thing, looked like it was breaking down, and then gapped up. Now this was, to be fair, because of an addition to, I think, the S&P 500, which tends not to be something that's persistent. But nevertheless, this is a pretty nice tight zone in here. And who knows? Business is pretty good. Diabetes, that sort of thing, right near all-time highs. I'm definitely flagging it. I'd like to see how it reacts the next week or two, but that's something to look at. And then Duolingo, which I think I mentioned to you a couple weeks ago. You had the Jagunda volume here on earnings, just a complete change in character. And so far, again, boom, not just one day, but 2 days, support on the third day, buying on the fourth day. And now it's pulled back and chopping around a little bit, but obviously I think it had a new closing high on Thursday. So that's or multi-month closing high since, late 2021. So that's obviously extreme relative strength, okay? And then just a few more. Solar stocks are tough, but this is First Solar. I kind of mentioned how this is sort of an ascending base. It broke out on giant volume, huge earnings estimates. Not that that's the be-all, end-all. And then so far, yes, it's getting tossed around, but very tight in here. You wouldn't know that the market's falling apart. That looks good. HubSpot is another kind of software turnaround. You can kind of see just a big decline, nice bottoming action. And now it's just kind of, you can see the RP line. It's just kind of looks like it's changed character. And again, as HUBS is a symbol, as it's pulled back here into its moving average, it's bounced pretty well. It's a little herky-jerky type stock, but big numbers. Looks like they're going to be focusing on profits here going forward. So we'll see how that goes. And last but not least, this is sort of, I'm half intrigued with this one, but it needs work to do. This is DraftKings. We know DraftKings gambling. There's a lot of competition there, of course, and the stock was worth like $50 billion back here near the top. And of course, it just disintegrated. But again, you kind of have this, it needed work to bottom. I'm not trying to make this sound to be the best thing ever, but it had this multi-month bottom, and just kind of a little bit of a change in character here. And I'm using this decline with growth stocks in the market to kind of, hey, if you're kind of, quote, speculative, or what people think is junk, you're losing money, but you have a good story and all that, and you did come back here when the market was good, and you can hold most of those gains when a lot of the market has gone over the falls. That's a pretty good sign. So far, DKNG is holding in there. I would need to see more personally, but I'm just kind of flagging it as, again, this sort of pullback. You wouldn't know the market has had some sort of financial panic and Credit Suisse needed to bail out or whatever. You would just look at this saying like, yeah, it rallied off its lows. It's got this bottoming formation, pulled back to the 10-week line. If someone looked at this chart in 2 years at this point in time, you wouldn't know what's going on in the world, which is a good sign. Okay, so that's another one. Now, be that as it may, I'm not trying to be Pollyannish. I I am encouraged that there's a lot of stocks still holding up well. Even some things that have been hit, like in the aerospace area, like they broke, like here's Transdigm, I think. It broke, but it's not, it's not terrible. It broke the 50, now it's trying to bounce. Again, there's probably going to be reverberations. I'm not buying this here, but it's just one of these things where you're seeing some of this stuff where like, hey, if we can kind of bounce a little bit from here, there's still a lot of stocks hanging in there, okay? Now, be that as it may, we always start with sort of the top down, and right now I am encouraged the Nasdaq's holding up, yes, but it's hard to ignore the banks, the financials, stuff that was strong, airlines and cyclicals and stuff like that. I'm not crying for it. I'm not a real cyclical guy, but you want to see the broad market, which was very healthy in here. You want to see it. It just did a complete round trip. That's not completely normal in there. This is the, small caps are the weakest of the week at this point, but still. So let's see how it goes. Okay, the longer we can support or bounce in here, better. But odds favor this will take some time. But just be sure to keep your eyes open. Keep your watch list fresh. If you have a ton of cash, I'm not opposed to a little nibbling or something, but keep your watch list fresh. Let's just see how it goes. Maybe this is, hey, maybe we're just going to go down here for 2 months and recession and all this stuff. And the Fed, like I said, slips on another banana peel. But maybe the market sort of thinks things will be contained, interest rates are coming down, and growth stocks anyway can have a run. We're just open to anything, okay? All right, that's all the time I have for today. Again, have a great St. Patrick's Day weekend, and we'll come by again next week for another Cabot Weekly Review.